Something extraordinary is happening in the silver market right now, and most people have no idea how significant it is. The pace of change is accelerating, the signals are becoming louder, and the implications for anyone paying attention could be enormous. What is unfolding is not just another routine movement in the commodities market. It is something deeper, something driven by forces that reach into the very foundations of the global financial system. Silver prices are not simply moving upward in a slow, predictable climb. They are rising with speed and intensity that has caught many observers off guard. This type of movement does not happen in isolation. It does not occur without powerful forces pushing beneath the surface. And when those forces begin to converge, markets can move far faster than most people expect. For many individuals, silver has always been viewed as just another metal, something used in jewelry or electronics, something that occasionally becomes the focus of investors when markets become uncertain. But in moments like the one unfolding now, silver transforms from a simple commodity into something far more important. It becomes a signal, a warning, a reflection of deeper economic tensions building beneath the surface of the global system. Right now, those tensions are rising. Many people believe that financial markets operate in a stable and predictable environment. They believe that the system is carefully managed, that stability is maintained through careful policy decisions, and that disruptions are temporary. But history has shown again and again that stability can be fragile, and when confidence begins to crack, markets can react with incredible speed. What we are witnessing today is one of those moments when confidence is beginning to shift. Across the global economy, enormous amounts of money have been created in recent years. The scale of monetary expansion has reached levels that would have seemed impossible not long ago. Governments have borrowed staggering amounts, financial institutions have expanded balance sheets beyond historical norms, and the entire financial structure has become increasingly dependent on continuous intervention. For a time, this expansion created the appearance of stability. Markets climbed, asset prices rose, confidence remained intact. But beneath that surface, a different reality was forming. When money is created rapidly and continuously, it begins to erode the value of existing currency. Purchasing power slowly weakens. The cost of living rises. Savings lose strength. And gradually, individuals begin to realize that the numbers in their accounts may not represent the same real value they once did. This realization does not happen all at once. It spreads slowly, almost invisibly at first. But once enough people begin to recognize what is happening, the shift in behavior can be dramatic. That is when capital begins to move. When confidence in paper assets begins to weaken, investors naturally search for alternatives that hold value outside the traditional financial system. Throughout history, certain assets have repeatedly served that role. They are tangible. They cannot be created through policy decisions. Their supply is limited by the physical realities of extraction and production. Silver belongs to that category. Unlike currency, silver cannot be printed. It cannot be produced with the click of a keyboard or the signing of a policy document. Every ounce must be mined, refined, and brought into circulation through real-world effort and cost. That simple fact gives silver a unique position within the financial landscape. When uncertainty grows, that uniqueness becomes extremely valuable. In the current environment, multiple forces are pushing investors toward assets that offer protection against systemic instability. Rising inflation, expanding debt, currency uncertainty, and geopolitical tensions are all contributing to a sense that the financial system may be entering a period of significant transition. Silver responds to those conditions in a powerful way. But the movement we are seeing now is not just about fear or uncertainty. It is also about opportunity. Markets are driven by human behavior. When investors begin to recognize a shift before the broader public becomes aware, they move quickly. They accumulate positions, they position themselves ahead of the crowd. And when enough early participants begin to act, momentum begins to build. Momentum in financial markets is one of the most powerful forces that exists. Once it begins, it feeds on itself. Rising prices attract attention. Attention attracts new participants. New participants create additional demand, and that demand pushes prices even higher. The silver market is particularly sensitive to this type of momentum because it is relatively small compared to many other global asset classes. When significant amounts of capital begin to move towards silver, the impact on price can be dramatic. What is happening right now appears to be the early stages of such a movement. Inventories in key markets have been tightening. Demand from investors has been increasing. Industrial demand for silver continues to expand as new technologies require larger quantities of the metal, and at the same time, global economic uncertainty is encouraging investors to seek protection in assets that hold intrinsic value. These forces are not temporary, they are structural. The modern global economy relies heavily on complex supply chains, digital financial systems, and massive levels of debt. These systems function smoothly when confidence remains strong. But when confidence begins to weaken, vulnerabilities can quickly become visible. In such environments, tangible assets gain importance. Silver occupies a unique position because it serves multiple roles simultaneously. It is both a monetary metal and an industrial resource. It is used in electronics, energy systems, medical technology, and manufacturing. At the same time, it has been recognized for thousands of years as a store of value. This combination of industrial demand and monetary demand creates powerful dynamics when economic conditions shift. If industrial activity expands, demand for silver rises because it is required for production. If financial uncertainty grows, demand also rises because investors seek protection. When both forces operate at the same time, the resulting pressure on supply can become intense. That is precisely the environment beginning to develop today. Global demand for advanced technologies continues to grow. Renewable energy systems require silver components. High-efficiency electronics depend on its conductivity. Modern manufacturing processes rely on it in ways that did not exist decades ago. At the same time, economic uncertainty is increasing. Rising debt levels are creating long-term questions about currency stability. Inflation is affecting households in ways that cannot easily be ignored. Trade tensions, geopolitical rivalries, and shifting alliances are creating a global environment that feels less predictable than in previous decades. These conditions naturally encourage investors to reconsider how they store wealth. When traditional financial assets appear vulnerable to inflation or policy risk, tangible assets become more attractive. Silver is often one of the first metals to experience increased demand during such transitions, but what makes the current situation particularly important is the speed at which conditions are evolving. Financial systems move slowly for long periods of time, and then suddenly they move very quickly. The shift from stability to volatility can occur faster than most people expect. Those who are paying attention early often have an advantage that disappears once the broader public begins to react. This is why the present moment deserves careful attention. The surge in silver prices is not just a chart pattern or a speculative bubble. It reflects deeper concerns about the future direction of the global financial system. When investors move capital into silver, they are not simply chasing returns. They are expressing a view about the stability of currencies, the reliability of policy decisions, and the long-term health of the economy. In other words, silver becomes a mirror reflecting broader economic reality. When that mirror begins to show rising demand, tightening supply, and accelerating prices, it is often signaling that confidence in traditional systems may be shifting. History has repeatedly shown that such shifts can create extraordinary opportunities for those who recognize them early. At the same time, they can create significant risks for those who remain unaware. Financial markets do not wait for everyone to understand what is happening. They move according to the actions of those who see the opportunity first. By the time the majority becomes aware of the shift, prices may already have moved far beyond the levels that once seemed available. That is why awareness is so important. Understanding the forces driving silver today requires looking beyond daily headlines and short-term price movements. It requires examining the broader economic environment, the structural changes in global finance, and the historical patterns that emerge when confidence begins to change. Throughout history, periods of monetary expansion have often been followed by rising interest in tangible assets. When currency supply grows faster than the real economy, the purchasing power of that currency can gradually decline. Investors respond by seeking assets that maintain value even as currency weakens. Silver has repeatedly served that role. This does not mean that silver rises in a straight line or that its price movements are always predictable. Like all markets, it experiences volatility, corrections, and periods of consolidation. But when large structural forces begin to push demand higher, the long-term direction can become extremely powerful. The current surge may represent the early stages of such a structural shift. Investors around the world are beginning to reassess risk. They are evaluating how inflation may affect purchasing power, they are considering how rising debt levels could influence currency stability, and they are exploring ways to protect wealth in an uncertain environment. Silver stands directly at the intersection of these concerns. It offers tangible value. It has global recognition. It exists outside purely digital financial systems, and it benefits from both industrial demand and investment demand simultaneously. When these factors begin to align, the result can be extraordinary. The question now is not whether silver is gaining attention. That process has already begun. The question is how far this movement could extend if the underlying forces continue to intensify. Because once momentum takes hold in the silver market, the acceleration can surprise even experienced investors. And right now, that momentum appears to be building. To truly understand the scale of what may be unfolding in the silver market, it is necessary to look beyond the surface-level explanation that prices are simply responding to supply and demand. While supply and demand certainly play an important role, the deeper forces driving the current movement originate within the structure of the global financial system itself. For decades, economic growth around the world has increasingly relied on debt expansion. Governments borrow to finance spending. Corporations borrow to expand operations and increase profits. Financial institutions borrow to invest and amplify returns. Households borrow to maintain consumption and improve living standards. At first, this expansion of credit appears beneficial. It fuels economic growth, it encourages investment. It creates the illusion of prosperity and stability. But over time, debt accumulates faster than the real productive capacity of the economy. When this imbalance grows too large, the system becomes fragile. The challenge is that once an economy becomes dependent on debt expansion, reducing that debt becomes extremely difficult. Attempting to tighten financial conditions can slow economic activity and create instability in markets that have grown accustomed to easy credit. As a result, policymakers often choose a different path. Instead of reducing debt levels, they expand liquidity within the system, more currency is created, interest rates are lowered, financial conditions are loosened in order to maintain stability. In the short term, these measures can appear successful. Markets recover, borrowing continues, growth resumes, but each cycle of expansion leaves the system more dependent on continued intervention. Eventually, a critical question begins to emerge. How much expansion can occur before confidence begins to weaken? When individuals start to suspect that currency supply may grow faster than the real economy indefinitely, they begin to reassess how they store wealth. Paper assets, while convenient and widely accepted, derive their value largely from trust in the institutions that issue them. If that trust begins to erode, even gradually, capital starts to migrate toward assets that exist independently of policy decisions. Silver becomes extremely attractive under such circumstances. Its supply is naturally constrained. Mining new silver requires time, capital, and physical resources. Production cannot be increased instantly in response to rising demand. When investor interest increases rapidly, supply cannot always adjust quickly enough to meet that demand. This imbalance creates upward pressure on prices. But the supply side of the silver market faces additional challenges beyond simple production limits. Mining operations are complex and vulnerable to disruptions. Environmental regulations, labor issues, geopolitical tensions, and logistical challenges can all influence production levels. Even small disruptions can have noticeable effects on global supply because the silver market operates within relatively tight margins. At the same time, industrial demand for silver continues to grow steadily. Modern technologies rely heavily on the unique properties of silver, including its conductivity, durability, and resistance to corrosion. Solar energy systems require silver components for efficient energy transfer. Advanced electronics use silver in circuits and connectors. Medical technologies utilize its antimicrobial properties. As global technology continues to advance, these applications expand. Unlike investment demand, industrial demand tends to be relatively stable and persistent. Manufacturers require silver to produce goods regardless of short-term price fluctuations. This creates a consistent baseline level of consumption that absorbs a significant portion of global supply. When investor demand increases on top of that industrial demand, the resulting pressure on available supply can become intense. This is one of the reasons why silver markets sometimes experience sudden and dramatic price movements. Because the overall market size is smaller than many other asset classes, relatively modest increases in demand can produce outsized price reactions. Another factor contributing to the current surge is the growing awareness among investors that silver often follows gold during major monetary transitions. Historically, gold tends to move first as investors seek stability during uncertain times. Silver frequently follows, sometimes with even greater volatility and percentage gains. This dynamic occurs because silver is both a monetary metal and an industrial metal. When financial demand rises alongside industrial demand, the resulting price movement can accelerate rapidly. The relationship between gold and silver has been observed for centuries. During periods of monetary instability, both metals often rise as investors seek protection from currency debasement. However, silver's smaller market size can amplify price swings once momentum begins. This amplification effect is one reason why many investors pay close attention to silver when economic conditions become uncertain. But the present situation involves more than historical patterns. It also involves the evolution of modern financial markets. Over the past several decades, financial systems have become increasingly digital and interconnected. Capital can move across borders almost instantly. Investors can access global markets through electronic platforms with unprecedented speed and convenience. While this connectivity offers many advantages, it also means that shifts in sentiment can spread extremely quickly. When investors around the world begin to focus on a particular asset class, capital can flow into that market at remarkable speed. Silver, because of its relatively limited supply and smaller market capitalization, is particularly sensitive to these rapid flows of capital. Once momentum begins to build, price movements can accelerate as new participants enter the market. Retail investors play a role in this dynamic, but institutional investors often have an even larger impact. Large funds, asset managers, and financial institutions control enormous pools of capital. When they begin allocating even a small percentage of their portfolios toward precious metals, the effect on the silver market can be significant. Institutional interest in silver has been increasing gradually as concerns about inflation, currency stability, and geopolitical risk continue to grow. Portfolio diversification strategies increasingly include allocations to tangible assets that can hedge against systemic risk. Precious metals often serve that purpose because they historically maintain value during periods of financial instability. This growing institutional interest adds another layer of demand to an already constrained market. Meanwhile, the psychology of markets continues to play a powerful role. Investors often respond not only to economic data, but also to narratives about future expectations. When a compelling narrative emerges around a particular asset, it can attract attention and capital rapidly. The narrative surrounding silver today revolves around protection against inflation, resilience during economic uncertainty, and participation in emerging technological demand. These themes resonate strongly in the current environment. Inflation remains a central concern for households and investors alike. Even modest increases in inflation can erode purchasing power over time. When inflation persists, individuals begin searching for assets that can preserve value more effectively than cash. Silver has historically served that function during periods of rising inflation. At the same time, geopolitical tensions continue to reshape the global economic landscape. Trade disputes, sanctions, political instability, and shifting alliances create an atmosphere of uncertainty that influences investment decisions. In such environments, assets that transcend political systems and national currencies often gain appeal. Silver's global recognition and physical nature allow it to function as a form of wealth that exists outside many traditional financial structures. Another element contributing to the current surge involves the distinction between physical silver and paper-based representations of silver. Many investors gain exposure to silver through financial instruments such as exchange-traded products or derivatives. These instruments track the price of silver but do not always involve direct ownership of the physical metal. While these instruments provide convenience and liquidity, they also introduce layers of complexity within the market. Physical silver, by contrast, represents tangible ownership. It exists independently of financial intermediaries. During periods of extreme market stress, some investors prefer assets that do not rely on the stability of financial institutions or digital systems. This preference can lead to increased demand for physical silver during times of uncertainty. If demand for physical metal rises faster than supply can respond, premiums on physical silver products can increase, reflecting the imbalance between available inventory and buyer interest. These dynamics further contribute to upward pressure on prices. Timing also plays a critical role in financial markets. Opportunities often emerge during periods when conditions are changing, but awareness has not yet spread widely. Early participants who recognize structural shifts may position themselves before momentum becomes obvious to the broader public. As awareness grows, additional participants enter the market, reinforcing the trend. The silver market appears to be approaching such a moment. Rising inflation concerns, expanding debt levels, technological demand, geopolitical uncertainty, and growing investor interest are converging simultaneously. Each of these factors alone could influence the silver market. Together, they create a powerful combination that may drive continued attention and capital toward the metal. Investors who understand these dynamics often focus not only on short-term price movements, but also on long-term positioning. Silver's role as both an industrial resource and a monetary metal allows it to participate in multiple economic trends simultaneously. This dual role can provide resilience during different phases of the economic cycle. During periods of economic expansion, industrial demand supports prices. During periods of financial uncertainty, investment demand often increases. Few assets possess this combination of characteristics. For that reason, silver has maintained relevance throughout centuries of economic change. Empires have risen and fallen, currencies have been created and replaced. Financial systems have evolved dramatically, yet silver continues to hold value across cultures and across time. That historical continuity contributes to its enduring appeal. The present surge in silver prices may represent more than a temporary market movement. It may reflect a broader reassessment of value occurring within the global financial system. If that reassessment continues, the demand for tangible assets could remain strong for an extended period. And if demand continues to grow while supply remains constrained, the price dynamics within the silver market could become increasingly dramatic. The surge unfolding in the silver market is more than a headline or a temporary spike. It reflects deeper shifts within the global economy, shifts driven by inflation, expanding debt, technological demand, and growing uncertainty about the future of financial stability. Silver stands at the crossroads of these forces, acting as both a strategic resource and a timeless store of value. When markets begin to question the strength of the systems that support them, attention often turns toward assets that exist beyond those systems. That is why moments like this demand awareness and preparation. Because when the forces driving silver truly accelerate, the opportunity does not wait for hesitation. It moves forward with momentum, leaving only one real question for those watching the market unfold: whether they recognized the moment in time or realized it only after the surge had already passed.